Good morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown. It's 8:10. There's the front page. Top right-hand side is what our discussion will be. Growing calls for Germany and Italy to pull 245 billion out of the U.S. Growing calls now. And lower left-hand side, inevitable dollar devaluation. That's a very popular post. There are other posts. The other thing we'll talk about today is, in brief, a post that I just put up on the Substack chat, giving you a tactical review of how things are going right now and what the most likely outcome is for today. And you can do with it as you please. But for now, let's start with the markets themselves. 10-year yields are unchanged bid. The dollar is down 35 at 97.99. The S&P 500 is 60.74, up 48. The VIX is 18.06, down 1.75. Gold 33.20, down 49, almost $50. Silver 36.13, bucking the precious metal trend, but reflecting a return of risk-on mentality, is up 10 cents. Copper is 487, 488, up 2.5 cents. WTI continues to be bled to death, 66.78, down $1.50. Natural gas 360, down almost 4. Sympathy, really. Bitcoin 105, 250, down 108. Really, that stinks if you're a Bitcoin long, which I am. It should be up more. Palladium down 4. Platinum trading 1301, up 18, almost 19. That's a reflection on 13th strike having larger open interest, and the banks are somewhat short that strike. Gold, silver down a penny and a half, $1.50, a point and a half, and a down day for gold. Interesting, you would think. Grains are all down, with wheat leading the charge to zero. All right, so there's the front page. Let's start. Again, two topics today. One will be the Germany and Italy thing, and then I'm going to do a little tactical work with you on what's going on in gold today, what could happen the rest of the day. Growing calls for Germany and Italy to pull 245 billion out of the U.S. Recall, if you will, back in April of this year when Goldfix raised reader awareness by breaking the news in the U.S. that Germany had a nascent but growing movement to repatriate its gold from the U.S. Of chief importance was the long-standing assumption that Germany's gold reserves were safe in New York, and that was no longer being taken for granted. Turns out this is now a growing risk to global bullion markets. Today, there's news on this today. Yesterday, okay? Yesterday, the Financial Times reported that Germany and Italy are under mounting pressure internally in their government to move their gold reserves currently held in New York back to Europe. Continuing, critics across Europe are questioning the prudence of outsourcing custody to the U.S. Fabio De Masi of Germany's BSW party told the Financial Times that relocating gold to Europe during turbulent times is logical. You could see their German gold allocations. Most of the rest of the gold that they haven't pulled back is in the U.S., and there's a smidge in England, which may or may not be available to them. While we at Goldfix do not expect these cries from an increasing number of politicians in the countries mentioned to be convincing of the neoliberal establishment governing those countries, we do expect behind the scenes governments are scheming how to quietly address concerns without roiling a bullion market already in turmoil from the recent LBMA insolvency from a lack of free-floating gold. If these countries vocally, publicly said we want our gold back, it will be the end of the LBMA, because we believe there's so much encumbered bullion out there that if Germany and Italy wanted to do it, then you would have the gold window closing again in the U.S. COMEX would stop letting people take gold out. They just would. The LBMA would shut down because they have 2 to 10 claims on each ounce of gold that they all have, including but not limited to the ETFs. So it's real. It's not going away, and it's actually growing. I would also add, even though it's not the majority of the politicians in Germany and Italy, it's equally weighted left and right. On the left side of the aisle, like very left, right? We'll call it extreme left. They want the gold back. And on the extreme right, they want the gold back. And in the middle, what do you have? Bureaucrats and neo-Keynesians who continue to ignore the voices of change. Okay, that full analysis is in premium. Moving on, related post, Hartnett yesterday. Hartnett gold and oil returns during the 50 years, gold wins. The point of that is it's not the event, it's the aftermath that matters. And we said so in more detail with the founders. AM, aftermath, not headline, sent out early in the morning. Gold and oil in the wake of Iran escalation. You know what that's about. GoFix PM has all of that and more. Let's talk about tactical concerns today. We sent out in the Gold Fix daily chat on Substack that gold was down $41 at the moment. And we decided to take a tactical interest today for readers because it was a moment that everyone can understand and hopefully a moment to make them make a decision on if they wanted to buy more or not buy more or sell, whatever they want to do at this area. But it's imperative to understand how a market works in the micro because most of you already understand how it works in the macro. Okay. The point of the conversation was with gold trading down $39 or $40, we asked ourselves, where will the next $25 be? And the choices were 30.25 to 30.50. Let's put that chart up. There's that chart. With gold trading at the red arrow this morning, 33.26, we asked ourselves for the rest of the day, what is more likely, $25 higher or $25 lower? The reason we picked $25 is because lower is 3,300, which there happens to be a large contingency of options on board. Above that is 33.50, which more or less is the floor for the recent collapse that started yesterday. Well, actually, about 2 days ago. And so we asked ourselves what's more likely, and we were indifferent, slightly bearish. But then one of the founders had mentioned that the open interest in 3,300 strike was coming off today, and that there might be leverage to push the market lower. And so the answer is 3,300, we said in that post, with the market $16 higher. And so that was a cue to get short. So we think 3,300 is more logical than 3,350 for the rest of the day. Now, as we get closer, that opinion gets less pronounced. But the explanation in the post that we sent everyone was this. The bullion banks are behaving normally, lightly, but normally. They're selling above the market legitimately. The buying is scared and they're not buying dips. And number 4, there's big options expiration that will act like a gravitational pull to the strike for the rest of the day. So if you're hoping for a rally today, don't. Hope for it tomorrow. 3,300 is more likely than 3,350 for the rest of the day. Tomorrow, all bets are off. Looking at the rest of the charts, top right-hand side is gold. That's polytrends, poly markets. The lines you see that you're not familiar with. And they argue that unless we get above, Sumo argues that unless we get above 34.30, the trend would be lower on the longer term. On the shorter term, if the market does not get above 33.58, the trend should be at least a little bit lower. That's that. On the left-hand side, you got WTI actually returning to trend. It may be a buy here. I'm not saying it is. Lower right-hand side, lower left-hand side is the dollar. Those signals that we get, the one that we got in silver that said to buy it, and the ones that have served us well over the years for certain good risk reward, are starting to set up in the dollar now. Now, we don't know which direction yet, frankly. But if the market were to get cooking, 101 should not be a problem in a heartbeat. I don't think it's going to happen with the risk on. People are selling dollars now as the safe havens are no longer needed. With the uh, lukewarm version of Pax Americana returning, but I would keep an eye on it over the next 3 or 4 days. The market gets above 99.53, we could rally hard. If it gets below 98.03, which we're kind of at right now, and closes below there on a daily basis, it could crack a lot lower. So there you have it. Maybe short gold, short the dollar is the trade today. I'm Vince. Have a great day.